On to other news that made business headlines around the country. Take a look.
The cost of living has soared to a 15-month high, with June inflation closing at 6.32% from a low of 5.87% in May. This is the highest cost of living faced by Kenyans since February 2020, when inflation stood at a high of 7.17%. Data from the Kenya National Bureau of Statistics attributes this to greater food and fuel costs, which had a knock-on effect to energy and transport costs. Foodstuffs, including sukumawiki, spinach, beef and cooking fat, registered increased costs, offsetting a cool down in the price of commodities such as potatoes, onions and tomatoes. Elsewhere, the World Bank projects the Kenyan economy to rise from a 2020 slack to a 4.5% growth rate this year in its latest report. The multilateral lender expects the rebound to be anchored on the reopening of the economy following initial COVID-19 restrictions last year, to include a moderate recovery in the services sector of the economy. In the banking sector, the Kenya Deposit Insurance Corporation will roll out the risk-based premium assessment model for banks starting midnight tonight. This means that high-risk lenders, in terms of their liquidity positions, capital adequacy, asset quality and governance structures, would pay a higher premium to the fund.
People talk of closing banks. To us, closing banks is our last line of defense. But our first line of defense is we are supposed to provide incentives for sound risk management.
In the energy sector, Daniel Kiptoo has been appointed as the new Director General of the Energy and Petroleum Regulatory Authority. Kiptoo, who has served in the role on interim capacity since mid-December, begins a 3-year term as the regulator's chief head on Thursday. Prior to his appointment on acting capacity and the subsequent promotion, Kiptoo was the legal advisor at the Energy Ministry and the chairman to the state's first oil committee. Dennis Otieno, Citizen TV.